to the management at Yes Bank. The management is with us, Mr. Prashant Kumar, MD and CEO at Yes Bank, after declaring numbers over the weekend. Sir, thank you so much for taking out time for us. Let's first start with the important deal step that has been taken, which means that you've taken a ARC deal. Can you give us more details on the deal and how does it aid bank on the asset quality side?
On the ARC, actually, like if you see, we were engaging with the partners for last 1 year. Okay. And now we have finalized the partner who have given a base bid of 11,183 crores, which is 135% of our net NPA, which we carry in our books. Now, once we have already launched the Swiss challenge process, and depending on the final bidder, which would be definitely more than or equal to 11,183, the bank would be able to move most of the NPAs in the ARC. And then at the end of the financial year, the bank would be left with a gross NPA number somewhere between 1.5 to 2%. Not only structurally, balance sheet would be very strong, but I think even optically, it also gives a very good sense to investors about the bank. The second part would be definitely in terms of management bandwidth, which is currently engaged in the recovery and the resolution, and which would be subsequently done in the ARC process. The third major advantage would be because we are carrying a gross NPA number of almost 27,000 crores. Once this would move out, even the requirement for the bank for keeping the priority sector would also become lower. And that would also add to our bottom line. And then the subsequent recoveries through the ARC, we would be getting almost 80% of that in the bank.
Okay, so you have aging provisions of almost 6,600 crore rupees on the book. Is it a bit higher from what the management was earlier expecting?
On the SR, I think even the carrying value of the SR may be lower than 6,500, but even if it is 6,500, this is not an issue because we would also be continuously getting the recoveries, which would also offset the requirement for any additional provisions on the SR.
Right. So are you saying that as the net asset quality on Yes Bank's book is lower than the bid put in by JC Flowers, and you will adjust the excess as a set-off against the net carrying value?
Yes, that would also be there. Plus the recoveries in next 2-3 years, because this aging requirement would also be there for next 3 years. And next 3 years, we would also be getting the recoveries from the stress asset. So that would offset those kind of requirements.
As you mentioned that you've been working for the last 1 year on the ARC deal, what is the kind of due diligence done on Yes Bank's side and how confident are you about recoveries going ahead?
I think the due diligence from both the partners have been done very, very extensively. Due diligence from our partner on the individual assets, which has taken a long time, and because before submitting any bid, they also need to be sure what kind of recoveries can happen. And similarly, we have also seen in terms of their capabilities and also ability to put a large amount of the capital. Why we are confident of the recoveries from this ARC? Because if we see the base bid, which is 135% of the net carrying value of the NPAs in our books, it means this is also discounted because the recoveries would happen over a period of 2-3 years. And if there is a bid for 11,183, it means the recovery prognosis for our net carrying value is much higher. And after discounting, it is 11,183, which is still 135% of the net carrying value. So I think we are quite confident and we have demonstrated in the past that we have been able to recover much more than what we have provided. And if you see the recoveries which we make, almost 40% comes to our P&L.
Okay, that point is taken, Mr. Kumar, about your operational performance. But the big cue really for this stock is the fundraise that you have planned for almost $1 billion in FY23. And you have been talking to a couple of partners very actively as well. At least that's been reported with the likes of Carlyle and Advent. How much will your CET improve post that? And as the bank has strong growth plans, when do you expect the fundraise to be completed? Are you confident it will be done this year itself?
So this entire $1 billion, which we are proposing to raise during the current financial year, would be entirely the CET. It is not a debt. Okay. And during the course of the year, currently our CET is around 11.9, but definitely the bank requires not only to create a buffer, but also the growth capital for the future growth. So during the financial year, depending on the market conditions, whenever we will find the right time, we will be raising this capital.
Right. So will the fundraise then come in the first half or the second half? And are there any talks ongoing? If you could just give us some details on the growth plans, because they clearly hinge on the fundraising.
No, I think there is no constraint from the growth side. It means like it's not like a constraint that we would not be able to grow if we are not able to raise capital, say, by the first half. And that is exactly what I am saying. Currently, it's a comfortable CET. It would not hamper our growth aspirations. It's more in terms of the market conditions. Okay? And I think we need to take a call which is good for the bank. So whether this happens in the first half year or second half year, it would not impact the growth prospects.
Lastly, sir, if you could share some growth perspectives for FY23, FY24.
For current financial year, we are aiming at a growth of 15% on the loan side, where the retail, MSME, and medium enterprise would grow more than 25%. And the large corporates, we are aiming to grow around 10%. But overall, it would be a 15%. And by June, we have already registered a growth of 14%. But at the same time, we also need to be cautious in terms of what is happening in the ecosystem, in the environment. There are huge challenges, both globally, though India is much better than what is happening globally. But I think we need to be very, very cautious. And next year growth we would like to grow more than the industry. So depending on what happens overall in the industry, but we would be growing more than the industry.
Okay, Mr. Kumar, we'll let you go on that note. Thank you so much for joining us and telling us the latest with respect to your fundraising plan and what's happening at the